Hello everybody, welcome to the update, and today I want to talk to you about the timing of the S&P 500 corrections, but not the short corrections, but the longer corrections. We seem to be having some kind of a rally here, and nobody knows whether this is a total rally where we're gonna go back to the all-time highs, or whether this is some kind of a bear market rally, and after that we go lower. Fundamentally speaking, the damage, lots of damage has been done. For instance, I've just seen, or even from my perspective, I wanted to book a holidays in the summer, and I've realized that the air tickets to the Asia have gotten significantly more expensive than I flew the last year. And this is just very simple. Of course, in the gas stations in Europe, of course, you can see dramatic increases. So I do think that quite lots of damage has been already done, and I think that speaks against just a recovery into the new all-time highs. Although nobody knows, but today in this video, I want to be talking to you. I want to show you something magical, something quite impressive using Fibonacci's, and it's going to be impressive especially if we really are at the start of a longer correction that's going to take months and months to fully play out, and then another months and months and months to recover from, so that at earliest the next year we would see the new all-time highs for the S&P 500 in that case. Okay, so if that's because that's basically how it was in 2022, and I want to show you something really impressive with the timing. So we had the last 2 weeks ago we had this weekly close bottom. Okay, and when you compare it to 2022, you could argue that it is this bottom here. That was the first kind of a weekly bottom before we had some kind of a really interesting bear market rally that lasted a couple of weeks. And so again, we can argue that this area right here is this area right here. Okay, it's similar fractal. It would be hard to deny that. So now let's maybe turn off the rest of the chart. Oops, like this. And as you can see, now I have basically I have hit the rest of the chart, and now we are in the March 2022. And now what I'm going to do, I'm going to project the Fibonacci's in time, and I'm going to start at the week where we had the weekly high. Okay, the weekly high. And then I'm going to put the first level, the 0.236 level, I'm going to put it at the weekly low, the last weekly low. This is March 2022. But since I'm comparing the fractal, it means that the 2 weeks ago would be this week. And now let's turn on the time and let's see what's gonna be happening. So we have drawn this Fibonacci's in time. That's what we have done. And at the first thing, what we are going to see that this green level, the 0.5 level, that's where exactly that week there was some kind of a swing low, some kind of a swing local bottom, local low. Another fib level, this one is 0.618. The 0.618 level, another swing low, another local low. Another fib level is 0.786, a very powerful level, and around that level we made a high. So as you can see, the swing points are being added up. And the most important finding, guys, like the purpose of this video is that I have realized that the one level, basically that's where the like how you measure the Fibonacci's between the levels between 0 and 1. So the 1 is at the bottom. So the 1 was, and in this case it was September 2022, even though we had a double bottom. We had a double weekly bottom and the second one had a wick. But weekly lows, weekly closes were around the same. So you can count this as a bottom as well. And that's where the 1 was. Okay, so I hope that is reasonably clear. Now let me disable this timing, leave. So I have turned back on the rest of the chart. And so this is how you see what we have drawn. And naturally, we have done all of this work right now to prove. So let's choose this weekly high as the level 0 again. Okay, let's do the same for the current time. Let's pick the first weekly low. Let's pick that on the red level, 0.236. And now these Fibonacci's in the time, they could, just like before, they could, or some of them, if not most of them, could work as some kind of the swing points where the price is going to, basically, you know, something like this, where the price will be turning. But the most important conclusion of this video is that the one, that's where we could expect, based on this, if this is going to be playing out in a similar way that 2022, of course, or if that fractal is an indication, I should say, then we can make a conclusion that to the end of this correction, and again, it's all big if this is not just a short term, quickly to be recovered from correction, if the fundamental reasons like the oil damage has been already done to the economy, the tech, especially the tech, really immensely suffers from the increased oil prices, then we can expect that this correction, based on our research, will happen somewhere around the level 1. And that is in November. Actually, in November, I could even say. November, December. So around the midterms elections. Around the midterms could be the bottom of this correction. So I hope this makes sense. This is original. I haven't seen anybody else talking about this. So I thought this would be definitely worthwhile to make a video about.